Welcome to the Anti-Money Laundering and Counter-Terrorism Financing Awareness course. Our course outline for today will cover lots of interesting topics. The history and origin of money laundering definition, money laundering stages, examples on money laundering, why do we need to fight money laundering, reverse money laundering definition, terrorism financing definition, terrorism financing stages, consequences of non-compliance. So this will be our learning objective for this course. And at the end of the course, we will have a quiz to test our knowledge. Let's get started. Our first topic for this course is what is the history and origin of money laundering? So how did this problem start? When did it start? Is it an old problem or a new one? Money laundering is a very old problem. It has been with us as old as the human nature. So when we had the first crime on earth, we had the first money laundering. However, at that time, we didn't have a crime named money laundering. So although the act took place, but the act was not criminalized. We didn't have money laundering crime at that time. When did we start to see money laundering very obvious? We started to see money laundering very obvious when we looked back at the early 20th in the United States, in Chicago in specific. And we found that the mafia used to do all kinds of crimes. They used to do gambling, they used to do drug trafficking, human trafficking, all kinds of crimes. What did they have as a challenge? They wanted to launder this money. In other words, they wanted to deposit these proceeds of illegal acts into the financial system. How did they manage to solve this challenge? In fact, they had two challenges. The first challenge is when we approach the banks, for example, or any financial institution, how can we show a legitimate source of funds? Another challenge is in the United States, it's a non-cash based society. So it's not normal that people there will have a large amount of cash or transact in a large amount of cash. So they had also to answer this question. From where did they obtain the large amount of cash? Why they are moving with this cash? What are they intending to do with this cash? So all these are questions that needed to be answered in a proper and convincing manner. The mafia started to think of a way out for this challenge, or for all these challenges that they had, and they decided to start a large laundry business, laundromats, laundry shops, operating by coins, self-service, properly licensed, registered. So the term money laundering is said to originate from the mafia ownership of these laundromats in Chicago, United States. Now, how did they manage to launder the money? Of course, as we mentioned, that the mafia or these gangsters were earning huge sums in cash from different types of crimes, and we call these crimes the predicate crimes, like, as we mentioned, extortion, gambling, drug trafficking, and so on. They needed to show legitimate sources for this money. So what did they do? They started this laundry business, and the laundry business, of course, started to generate cash because it's self-service. This cash, of course, is legitimate. So one of the ways they used was by purchasing outwardly legitimate businesses and mixing these illicit earnings with the legitimate earnings from these businesses. So they used to mix the funds, the legal funds generated from the laundromats with the illegal funds that they used to generate from all types of crimes. And they approached the banks and the financial system and deposited this money, showing that the source of funds is the laundry business, which is legitimate. So laundromats were chosen by these gangsters because they were cash businesses, and this was an undoubted advantage to people who purchased them. So by doing so, they managed to launder the money. And that's where the term money laundering have emerged. Why do we call it money laundering? Because the mafia, they succeeded in laundering their money. And because the first legitimate business that they used to launder their money was the laundry business. And that's why we have the term money laundering. So how can we define money laundering? What is money laundering? There are lots of definitions for money laundering. Of course, if I am talking to a non-banker or a non-financial professional, and I want to explain to them what money laundering is in a very simple words, I would tell them money laundering is simply changing illegal money into legal money or dirty money into clean money. But if I'm talking to a professional financial professional or a banking professional or a regulator or a prosecutor, I would need to tell them a much better definition. So let's see one of the definitions of money laundering. Money laundering is the deposit of the proceeds of criminal activity into the financial system, moving these proceeds from one institution, account, and or country to another in a manner that conceals the original identity of these proceeds for the purpose of evading criminal prosecution. So if we want to launder money, we as criminals have done crimes. These crimes have generated a large amount of cash, and this cash is illegal, not legitimate. We want to make it legitimate. We want to transfer it from an illegal fund out of the financial system into legitimate legal fund within the financial system. So the only way to do so is to deposit it into the financial system. And take care that I didn't say deposit it into the bank. Why is that? Because I may not deposit into the bank. I may choose any non-bank financial institution. I can choose any DNFBP, any designated non-financial business and profession, to deposit my money or my illegal money into the financial system. The financial system, in fact, comprises of financial and non-financial institutions. So once a money launderer approaches the financial system, he has to choose based on the scheme that he wants to follow, which financial or non-financial institution he would want to use it as a first step to deposit these illegal funds into the financial system. And that's why when we mention financial system, we are covering all the possible ways of placement or deposit of this funds into the financial system. Now, once these funds are placed or deposited into the financial system, the money launderer will move these proceeds or these funds, which are now clean, from one institution to another, from one account to another, or from one country to another, or all of the above. What is the purpose here? The purpose here is to make it more difficult, more complicated to trace the funds and make it more difficult to reach to the initial illegal source of these funds. So once they deposit the illegal money, they keep on moving it over and over to make it more difficult and impossible to be traced. Once they do that, so they have actually cleansed the money, they have actually covered up this illegal transaction, which they have done by illegally placing illegal funds into the financial system, then they are now ready to withdraw these funds from the financial system and use it. They have two options in this case. Option one is to use it for legal purpose. So I made some illegal activities to become rich faster. Now I'm rich. I don't want to continue doing illegal activities or crimes. I'm now going to use my wealth, which I have generated from an illegal source, laundered it. I will now continue legally. So I will start to have legal business and I will start to continue legally and not doing any illegal activity anymore. This is one option. Option two is they can withdraw this money and they can still use it again for illegal purpose. So let's say I'm a drug dealer. I sold drugs. I made a huge amount of profits, illegal profits. I managed to deposit this illegal drugs money into the financial system. I moved it from one place to another to make it more difficult to trace. And I withdrew it from the financial system. So now it became clean. I withdrew it from the financial system. And again, I'm going to use it to purchase more drugs, again, sell it, and again, continue that cycle over and over. So the criminals, they have two options. When they withdraw the money from the financial system, the clean money now from the financial system, they have the option to use it for legal purposes and for illegal. So that's in summary how the cycle of money laundering is happening and how criminals launder their funds. Now, when we look at this definition, are we dealing with the best definition possible for money laundering? Or that definition has some deficiencies? To discover that, let's ask ourselves one question. Does money laundering include cash in all cases? What do you think? The answer is no. So, do we need to launder money to use money in the different stages of money laundering, or do we need to see money in the different stages of money laundering? The answer is no. Now, going back to the same definition, we found that definition is saying money laundering is the deposit of the proceeds of criminal activity into the financial system. That definition here is assuming that we can only launder money with cash, not with any other way, which is not correct. So that's the first deficiency we have in that definition. Another deficiency, if I asked you, if somebody is laundering money and some other people are assisting him in laundering his money, Who will be charged with money laundering? Is it the person who's laundering money, or plus everybody who's assisting him? The answer is the person who's laundering money plus everybody or everyone who's assisting him. That means all of them will be charged with money. So did that definition refer to assistance element? No. It's only looking at the person who's laundering his money. But those who are assisting him, they are not covered under that definition. And that's another deficiency in that definition. A third deficiency. Let me give you an example. Let's say today you wake up in the morning and you are reading the newspaper and you found an ad for a property for sale. You contacted the seller, you went and viewed the property, you liked the property because you were in fact looking to buy a property, and you decided to seal the deal. You decided to go for it, buy the property. You bought the property, you registered it, everything is perfect. Now, my question is, if the person who sold you the property is a money launderer, will you be charged with money laundering? Yes or no? Now, the answer here is very tricky. In fact, I cannot say yes or no unless I tell you if the person knew that this property is an outcome of a crime or he didn't know. If the person didn't know that this property or this asset is an outcome of a crime, that person will not be charged with money laundering and he would be considered as a buyer in good faith. But what if the person knew that this asset or this property is an outcome of a crime and he's dealing with a criminal and he still proceeded with the transaction? In this case, the person will be charged with money laundering because he has assisted and helped the criminal to launder his money. So knowledge is a very essential element for criminalization when we talk about money laundering. Now, let's look at the definition. Did it take into consideration the knowledge element? The answer is no. And that's, again, one of the deficiencies of that definition. So as you can see here, there are lots of deficiencies in that definition. And the conclusion is we are not dealing with the best definition for money laundering. Now, we need to find a better definition of money laundering. So, the United Nations, the Palermo Convention, have actually defined money laundering. So, what is the Palermo Convention? The Palermo Convention is also known as the United Nations 2000 Convention against transnational organized crime and other protocols. So how did the Palermo definition of money laundering differs from the previous definition of money laundering? So let's see how Palermo Convention redefined money laundering. They define money laundering as the conversion or transfer of property. They did not mention money. They did not mention cash. And that's the first loophole or deficiency we had in the previous definition. It has been tackled here in that definition. Knowing it is derived from a criminal offense. So if you convert or transfer the property, knowing that this property is derived from a criminal offense. So here they tackle the second deficiency in the previous definition, which is the element of knowledge. Did the person who is acting or transacting on this asset or property knew the connection of the property to the illegal source or to the crime or not? So if you convert or transfer the property, knowing it is derived from a criminal offense, for the purpose of concealing or disguising its illicit origin. So what is the illicit origin? It is the predicate crime, the crime that generated that illegal property, or of assisting any person who's involved in the commission of the crime to evade the legal consequences of their actions. That's the first part of the definition. So anyone who converts or transfers a property or an asset, knowing it is generated or derived from a criminal offense, having his objective or purpose is to conceal or disguise or hide the illicit origin of this property, or he is assisting someone who's trying to do so to help himself or that person to evade the legal consequences of their action. That means this person or these persons are laundering money. Let's proceed. The second stage here is called the concealment stage. So the concealment or disguising of the true nature or source or location or disposition or movement or rights with respect to or ownership of property, knowing that it is derived from a criminal offense. So any person who tries to conceal or disguise or hide the true nature or the source or the location or the disposition or the movement or the rights with respect to this property, or he owns this property, knowing that this property is an outcome of a crime or derived from a criminal offense, the person is laundering money. So I could be assisting a money launderer in laundering his money by hiding the location of the illegal property, or I could be a money launderer, so I'm disposing of this property, or I am moving this property from one place to another, or I am changing the rights with respect to this property by, for example, leasing it or renting it out, or I'm changing the ownership of this property by selling it or by buying it from a criminal. All these are acts. The purpose of these acts are to conceal the original identity of this property. So anyone who's involved in that, knowing, is a money launderer. Now let's proceed. The third stage is the acquisition. So the acquisition or possession or use of property, knowing at the time of its receipt that it was derived from a criminal offense or from participation in a crime. That means if anybody acquired or possessed or used the property, knowing at the time he received this property that it is derived from a criminal offense or from participation in a crime, that person would be charged with money laundering. So, as per the Palermo Convention, the three stages of money laundering are conversion, concealment, acquisition. And as we could see here, it's not just about cash, it could be a cash, it could be any other asset. And the important element here is the knowledge element, and whether the person is laundering money or anyone who is assisting him in laundering this money or this asset, all of them will be charged with money. So, in fact, if we look at money laundering, it is a crime and it's a separate crime. But one key feature of money laundering crime is it is always dependent on another crime. So it's always dependent on the predicate crime. So if I do a crime today, I'll be charged with that predicate crime and I'll also be charged with money laundering. So let's say somebody committed fraud. He'll be charged with fraud and he'll be charged with money laundering. If somebody committed human trafficking, this person will be charged with human trafficking crime, which is a predicate crime, and also the money laundering crime. So in fact, if you look at this situation, we can always see this as the buy one, get one free offer that you see in the shopping malls. So in the criminal industry, we have a special offer, do one crime, get one crime free at least. And at least that means I can do one crime, I can get more than one crime free. So let's say, for example, a person committed tax evasion crime. So he'll be charged with tax evasion and he will get two crimes on top, two crimes free. He'll be charged with fraud crime and he'll be charged also with money laundering. So total of three crimes, although he committed one crime. So he did one crime and he got two crimes. That's always the case. And the purpose of this is to prosecute the criminals and to punish them harder and to make sure that we convey the message that crime doesn't pay. So, as you saw in the definition, we have been repeating the word knowing 3 times in the conversion stage, in the concealment stage, and in the acquisition stage. So, what do we mean by knowledge? And what do we mean by willful blindness? So knowledge is the fact that you know that the asset is connected to a crime. Now, what if you knew that and you decided to ignore this fact? In other words, you have committed willful blindness. So what's the definition of willful blindness? Willful blindness can also be called as ostrich instruction. It can also be called as purposeful indifference, willful ignorance, conscious avoidance. All these terms are equivalent to each other. Now, how can we define willful blindness? Willful blindness is defined as the deliberate avoidance of knowledge of the facts. So if somebody, for example, is buying a property, he knows that this property is an outcome of a crime, and he decided to deliberately avoid this knowledge, pretends that he doesn't know. In this case, he has exercised willful blindness. And what are the legal consequences, or what is the legal perspective of willful blindness? Willful blindness is equivalent to actual knowledge. So if you pretend to not know, or if you try to avoid the facts showing that you don't know, from a legal perspective, you will be treated as having the full actual knowledge. So if you knew that the asset is connected to the crime and you proceeded with the transaction, or for example, if a banking staff has processed a transaction and he knew that the source of funds is not legal, and he decided to ignore this or to pretend that he didn't know, in this case, he has committed willful blindness, and the law will perceive that person that he has full actual knowledge. So if you have full actual knowledge and you ignore this fact and you have not taken any action by not processing the transaction or not entering into this transaction, in this case, you will face fines or jail sentences, or both of them. Let's take some examples on real cases that has happened. So FinCEN, which is the Financial Crime Enforcement Network, poses $1 million civil penalty against MoneyGram Chief Compliance Officer for exercising willful blindness. So willful blindness, as we can see, is punishable by the law. So that's a very important term that we need to be aware of. Another important term is tipping off. As you can see, we have the saying that the world has ears, meaning that you need to be very careful when you are discussing or dealing with money laundering aspects. confidentiality is very important because there are bank secrecy laws and we need to respect the bank secrecy law. That means we cannot discuss money laundering aspects with each other or with banks with each other. Or if I am a bank employee and there is a customer who is, let's say, doing a suspicious transaction, I should not be giving them any indication or telling them that they are suspected or they are under investigation, because that's considered tipping off. So tipping off is, it's important to ensure that you do not inform the suspected money launderer, as this is considered a tipping off, and tipping off is punishable by the law. So in this case, you need, as a bank, to process the transaction, and then you need to report this suspicious transaction to the Financial Intelligence Unit, which is responsible for receiving such reports and investigating in this case. But if you have informed the customer verbally or using any body language or any means of giving them the tip that you are suspecting them or they are under investigation, in this case, you have committed a tipping off crime and you will be prosecuted for doing so. Now, we define money laundering. We understood important terms like the money laundering term, the predicate crime term, the tipping off term, the willful blindness term. Now, let's talk about the different stages of money laundering. We have actually discussed three of them, which is conversion, concealment, and acquisition. There are also other stages of money laundering if I'm laundering money using cash. So the different stages for money laundering are placement, layering, and integration. So the question here is, what's happening in each stage? If you look at the placement stage, it is simply the deposit of the criminal proceeds into the financial system. Once the criminals do that, of course, this is an illegal transaction. It's a crime because you have actually deposited illegal money into the financial system. They follow this illegal transaction with series of legal transactions to cover up on the initial illegal deposit. So in this case, what do? They keep on moving these monies from one account to another, from one institution to another, maybe from one country to another, to make it difficult to trace and to reach to the initial source of funds, which is illegal. So after depositing the funds, making it clean, after covering up on that illegal activity, now you are ready for the third stage, which is called integration. And in this case, you are going to withdraw the proceeds. The criminal is going to withdraw the proceeds, now cleansed from the financial system, and they use these proceeds. And as we mentioned before, they have two options. They can use it for legal purposes or they can use it for illegal purposes, and they repeat the cycle again. So let's take a typical money laundering scheme. Let's take an example about how money laundering is taking place in the real life. Money laundering always starts by the predicate crime, as we mentioned, and the crime generates illegal proceeds. So the criminal in this case will start collecting the dirty proceeds. The first stage, as we just mentioned, is the placement, and the placement happens in the financial system. In the example, here we are assuming that they chose to deposit this money with a bank. So let's see how the placement will take place and how the layering will take place. So let's say that criminal has sold weapons illegally and he generated illegal money from selling the weapons. That criminal has a front business, which is a leasing and financing company. So he used the leasing and financing company to deposit the illegal proceeds of selling the weapons, showing that the source of funds is the leasing and financing company and the collection of the installments of the loan from the customers. So as we can see, that leasing and financing company is Company X. Company X maintains a bank account. So the messenger of the company will deposit, let's say, $200,000 into the Company X bank account, showing the source of this money is the cash collected from customers who paid their monthly loan installment in cash at the cashiers of Company X. Once the $200,000 are deposited into Company X account, of course, they are cleansed. Now they will start the layering procedures. So they will start to transfer this 200,000 into an offshore bank. They will make a wire transfer into an offshore bank. And an offshore bank, why is it chosen? Because offshore banks are more favored by the criminals because their bank secrecy is much higher. Their anti-money laundering laws and regulations are more relaxed. So criminals, money launderers, they love offshore jurisdictions. So once the money has been wired to an offshore jurisdiction, now they are in a jurisdiction where the anti-money laundering laws and regulations are more relaxed and the bank secrecy is much higher. Now, the money is there and they will move this money again. They will make another transfer of this money by giving a loan to a company called Company Y, which is a partner in crime. Once Company Y take the loan, Company X will issue a false service invoice to Company Y with an amount of $200,000. And Company Y, once they receive the deposit, the invoice, they will pay the invoice. They will make a wire transfer to Company X account payment of the invoice dated so and so with an amount so and so. Now the money came back to its origin, its Company X account, and it has been properly placed and layered. The third stage is the integration, and in this case, they will withdraw the money. And as I mentioned, the first option is to use it for legal purposes. It could be buying legitimate businesses and also enjoying their life by buying some luxury assets for their enjoyment. Or the second option is to go again and buy more weapons and, of course, sell these weapons, generate more illegal money, and repeat the cycle over and over. So that's how a typical money laundering scheme happens in real life. Of course, in real life, it's much more complicated. So it's not going to be a deposit of 200,000, a transfer of 200,000, a loan of 200,000, an invoice of 200,000. It's going to be different amounts, different jurisdictions, different transfers to different countries, and so on. So you cannot relate the money that has been initially deposited with the money that has been collected back at the end of the day. So, but for the sake of simplicity, we are just showing you how the money is flowing in a typical money laundering cycle. And as you can see, the money laundering cycle is circular. That means money is invested. Of course, it's invested in illegal um, purposes, and then the money is collected back, reinvested again in illegal purposes, and so on. So the money keeps on going and coming back, and the money ends up with the person who generated it. So the person who generates the money is always the person who will end up having the money. We have another important term which is called smurfing. So smurfing is dividing the large amount of cash out of the financial system into smaller amounts of cash to be able to be deposited into the financial system. So the criminal, as we see here in front of us, he sold a large amount of drugs. He received an even larger amount of cash. He cannot approach the financial system with that large amount of cash to deposit on one go. So he will hire a group of smurfs and he will divide this large amount of cash into smaller amounts of cash. divided among the Smurfs, and each Smurf will be given a time frame to go and deposit this money into the financial system. Of course, less his commission, and then these monies will be transferred to the main criminal account. So all these Smurfs will go and deposit monies in different um, financial and non-financial institutions. Then they will transfer the money to the account that they have been notified with within the time frame, keeping their commission. So that process itself is called smurfing. So let's see the different options in front of the Smurfs where they can go and how they can deposit the money into the financial system. So one of those Smurfs, he chose to commit currency smuggling. So he chose to cross the border, hiding the money, and going to a different country and placing this money into the financial system of that country. So that's what we call it currency smuggling, which is another important term. Another way is by buying some assets or commodities, like buying a luxury car or a ship or a tractor or any asset. The formula here is buy with cash, sell, get a check, and deposit the check in the financial system. Another alternative or another option in front of Smurfs is using the financial services, so they can buy some stocks with cash and they sell the stocks and obtain a check and deposit the check into the financial system. So as I said, summary: buy cash, sell, get a check, and deposit the check into the financial system without any question. Why there is no question when we deposit checks? Because the checks are mainly money within the financial system. That means the source of money is known and it is clean money. Why do we need to fight money laundering? So what are the disadvantages of money laundering? What are the bad outcomes of money laundering? And that's why we need to fight money laundering. If you look at money laundering and we look at the economy, we will find that the more money laundering is happening, the weaker that economy. Why is that? First of all, it will increase the inflation rate. It will deteriorate the currency. It will cause lots of economic distortion and instability. It will weaken the financial institution. It will make the control over the financial system and the economic system lost. We will not have any control over that because the criminals will be controlling the financial system. It will undermine the legitimate private sector. It will cause a reputational damage to the country. The country itself may be added to the blacklist, or it will be a sanctioned country. So there will always be a risk of international sanctions. That country will be less appealing to investors to invest in, because they know that this economy is a very fragile economy and it is mainly controlled by criminals. It will also cause increased crime and corruption. It will cause loss of tax revenue, and it will increase the crimes and will cause a very bad reputation of that country on all aspects: financial aspect, economic aspect, legal aspect, stability aspect, safety aspect, and so on. So, and that's why all countries around the world are having the objective to fight money laundering, except the countries, of course, that welcome the criminals and they are corrupted countries. And these countries, of course, they are sanctioned, and other countries classify them as high risk and they don't want to deal with them. So, what is the size of the problem? So, when we talk about money laundering, what is the size of the money laundering problem? It is estimated that annually we have a total of 2 trillion funds laundered. And that's a very huge volume of money laundering, which is actually equivalent or equaling to 5% of the global gross domestic product GDP. That's a very huge volume of money laundering, and that's laundered every year. So annually, we have a total of 2 trillion funds laundered. Approximately, there is $600 billion annually associated with the drug trade, and approximately there is 200 to $250 billion associated with the US drug trade. The US and the UK are having a large money laundering activities, and that's why these countries are having very strict laws and regulations to trace the criminals and prosecute them. Any country with a high GNP, high gross national product, and high per capita income is a target for the money launderers and the criminals. Now we understood what do we mean by money laundering. Now let's move to a very important term, which is reverse money laundering. So what do we mean by reverse money laundering? Or how can we define reverse money laundering? Reverse money laundering is defined as the deposit of legal or legitimate funds into the financial system, moving these funds from one institution or account or country to another, and then withdrawing these funds to support criminal activity. So as we can see here, it is actually the opposite of money laundering. So in money laundering, we were depositing illegal money into the financial system and moving it from one account or financial institution or country to another, then withdrawing it as clean money. Here, we are depositing legal money into the financial system, again, moving it from one account or financial institution or country to another, and then withdrawing it to support a criminal activity. So in money laundering, the source of money is illegal. The disposition or the end result of the money is legal. In reverse money laundering, the source of money is legal and the disposition or the end result of the money is illegal. So how can we give examples on reverse money laundering and see how is it different from money laundering? So the best example on reverse money laundering is terrorism financing. So in terrorism financing, the criminals use legal money generated from charities, collection of charities money, money generated from front business, legitimate money generated from front business. They use also the fundraising schemes to generate legal funds, and they use these legal funds for financing terms. They also have another source of financing where they can use illegal funds, but in this case, they have to launder it first, make it clean or legitimate, then they use it for financing of terrorism. So how can we define terrorism? The definition of terrorism is it is intended to intimidate a population or to compel a government or an international organization to do or abstain from doing any specific act through the threat of violence. So the terrorists will invest money to compel a government, to force a government or an international organization to do some certain acts which the government may not, or that international organization may not be happy doing or willing to do. And they force them doing these acts, or on the contrary, they may be doing certain acts and they want them to stop doing these acts. So how can they force them doing that? Using the threat and the violence. And they are willing to invest and pay money to achieve this objective. So terrorism financing, any financing of any operation that it that is intended to intimidate a population or to compel a government or an international organization to do or abstain from doing any specific act through the threat of violence. So anyone who finances or funds such an operation is considered a terrorist finance. If we look at terrorism and terrorist groups, we will find that an effective financial infrastructure is crucial and critical and very important for the continuity of the terrorist operations. And that's why cutting off the financial support to terrorists and terrorist organizations is crucial to disrupt their operations and prevent further attacks. Now, to understand terrorism financing, we need to understand the different stages of terrorism financing. And as we had 3 stages for money laundering, we also have 3 stages of terrorism finance. The first stage is called the collection stage. The second stage is called the dissemination stage. And the third stage is called the usage stage. So we have collection, dissemination, and usage. What's happening in every stage? In the collection, both legitimate and illegitimate funds provided laundering are collected and deposited into the financial system. So in the collection stage, all the monies in this stage are legitimate. Once they are into the financial system, they will again move the funds from one account or financial institution or country to another in a manner that will disconnect the relationship between the financer and the executor. The usage stage is otherwise known the point of use, and where the funds have reached to the point where it is ready to aid the terrorists and the terrorist activities. So, what are the consequences of non-compliance? So, of course, we mentioned that financial institutions, non-financial institutions, everyone should fight money laundering. Knowing that money laundering and terrorism financing are legal risks, of course, we fight them by reporting them to the relevant authorities, mainly the FIU or the Financial Intelligence. So what if a financial institution chose to not cooperate or not to comply? There are a range of powers, including but not limited to the following. The financial institution may be subject to an informal warning from their regulatory body, whether it is local or international. The financial institution may receive a formal warning from the regulator, which is, of course, worse than the previous action. They may be subject to fines or sanctions from the regulatory bodies or the regulators. They may risk having their license suspended for a certain period of time until they comply. So the license suspension can be a month, 2 months, 3 months, until the financial institution complies. Then the license can be reinstated again. And that's, of course, an action which will cause the disruption of the operation of the financial institution and will cause them, of course, lots of losses. Among the powers also, or the consequences of non-compliance, could be a complete license withdrawal. That means the financial institution can completely have its license withdrawn and they may not proceed or continue in the business any longer. And that's, of course, the worst. Now, the international regulators, they do have also additional powers like blacklisting the country, blacklisting the financial institution, or blacklisting persons who are responsible for money laundering, terrorism financing, or who are in violation of the compliance requirements. International fines or sanctions can be imposed on financial institutions, on countries, and so on. Prevention in dealing in US dollars. So the US can prevent any bank in dealing in US dollar if they have been non-compliant or if they have been facilitating money laundering or terrorism financing. The financial institution may also be prevented in clearing the US dollar. So they may not act as a clearing house for the US dollar, again, due to their non-compliance. The financial institution may also be disconnected from the global financial system. And again, as a result of the non-compliance. And of course, this will adversely affect the financial institutions or the bank's operation. And it may even lead the bank to collapse and not be able to continue in its business. So as we can see, there are huge consequences of non-compliance. And the conclusion is non-compliance is not an option. So if you think compliance is expensive, try non-compliance. And we have had lots and lots of examples of financial institutions that have collapsed, that have been shut down, or that have been heavily fined by the US Department of Treasury, OFAC, or Office of Foreign Asset Control. So when we talk about the international sanctions can be from the US Department of Treasury, Office of Foreign Asset Control, or OFAC. It can be from the United Nations. It can be from the European Union, or it can be from the Bank of England. In addition to the local fines that can be from your local regulator, like the central bank or any local regulator of the country. So every person, every entity, whether it's financial or not financial, every regulator, every prosecutor should join hands in fighting criminals, in protecting our financial system, in ensuring that criminals are being properly reported, investigated, prosecuted, and any asset that they have obtained illegally is confiscated and returned back to those who are entitled to it. So this is in summary, what do we mean by money laundering? Of course, this is just a brief awareness course. We have lots of detailed courses on this topic. And this is a complimentary course from ACC for those who would like to learn about money laundering or understand the basic terms about money laundering and what are the requirements, the regulatory requirements, and the legal responsibility on the financial institutions and on them as individuals. So after finishing this course, now it's time to test our knowledge to see if we are understanding the respective terms. So we'll have like a small quiz. We'll have 10 questions and we will solve them together after giving you the chance to test your knowledge. The first question is the 3 stages of money laundering without respect to their order. So don't worry about the order. And we have 4 options. Option A, layering, placement, refining. Option B, placement, refining, integration. Option C, refining, integration, layering. Option D, integration, layering, placement. So What are the stages of money laundering? You need to choose the right option. So the right option here is option D. It is actually placement, layering, and integration. Let's go to question number 2. Money laundering cycle is. Money laundering cycle is A, linear, B, circular, C, can be linear or circular depending on the scheme, D, similar to the terrorist financing cycle. You need to choose the right option. So the right option is option B. Money laundering cycle is circular cycle. Question number 3. Money laundering is. Money laundering is A, itself a crime and it is an outcome of another crime. B, not itself a crime, but it is an outcome of a crime. C, itself a crime and is not an outcome of a crime. D, not itself a crime and is not an outcome of a crime. The right answer here is A. Money laundering is itself a crime and it is an outcome of another crime, which is the predicate crime. Question number 4. Dirty money is most vulnerable to detection during which stage? Dirty money is most vulnerable to detection during which stage? A, layering, B, dissemination, C, placement, D, integration. The right answer is C. So dirty money is most vulnerable to detection during the placement stage. In other words, criminals are most susceptible for detection at the placement stage. Question number 5. Which of the following statements are true? Choose one or more answer. Which of the following statements are true? Choose one or more answer. A, cash is an essential element for money laundering to take place. B, cash may not be present in each of the 3 stages of money laundering. C, cash may not be present in all the stages of money laundering. D, without cash, there is no money laundering offense. So the right answers here are B and C. So cash may not be present in each of the 3 stages of money laundering, and cash may not be present at all in all the stages of money laundering. Question number 6. The effect of money laundering on the financial system is to. The effect of money laundering on the financial system is to A, create an opportunity for banks to increase profits. B, undermine credibility and expand control by criminals. C, improve and enhance money flows by bringing cash into the financial system. D, create more opportunities for investors to invest in the financial system. The right answer is B. So the effect of money laundering on the financial system is undermining the credibility and expanding the control by the criminals. Question number 7, reverse money laundering is. Reverse money laundering is A, placement of illegal proceeds into the financial system. B, using legal funds in the financial system to finance illegal activity. C, withdrawing illegal proceeds from the financial system. D, using legal funds in the financial system to finance legal activity. The right answer here is B. Reverse money laundering is using legal funds in the financial system to finance illegal activity. Question number 8, the 3 stages of terrorism financing without respect to their order are. The 3 stages of terrorism financing without respect to their order are A, usage, collection, dissemination. B, collection, placement, usage. C, placement, dissemination, collection. D, dissemination, layering, placement. The right answer here is A. The 3 stages of terrorism financing without respect to their order are collection, dissemination, usage. Question number 9, terrorism financing cycle is. Terrorism financing cycle is A, linear cycle. B, circular cycle. C, can be linear or circular depending on the scheme. D, similar to the money laundering cycle. The right answer here is A. Terrorism financing cycle is linear cycle. Question number 10. What does OFAC stand for? What does OFAC stand for? A, Office of Foreign Accounts Control. B, Office of Financial Asset Control. C, Office of Foreign Assets Control. D, Office of Financial Accounts Control. The right answer here is C. What does OFAC stand for? It stands for Office of Foreign Asset Control, and it is an office related to the US Department of Treasury. So I would like to thank you for attending this course, and we look forward to welcome you to more courses. You can reach to us. We are located in Clover Bay Tower, Zone B, Level 19, Office 1906, Al Abrar Street, Business Bay, PO Box 53962, Dubai, UAE. Our hotline is +971 585 ACC UAE. That's 222823. You can reach to us by email on info@acc-co.com. You can visit our website on www.acc-co.com. You can always count on us, and please follow us and like us on social media. Thank you very much.